guidance. They pulled it down by about 3 pennies,
right,
in the range. And the stock has come off of off the lows. Not that it was down a lot. It was down, I don't know, $6-7. It's down $4.50 right now. Pete, Dan Ives says Microsoft is an FX-related earnings tweak. Nothing fundamental here. We view overreaction on knee-jerk, just like Salesforce citing FX. Bullish view on Microsoft unchanged. And if you do recall, Benioff pretty much said the same thing the other day when Salesforce reported about the FX issues that they were seeing as well. You own the stock. It's one of your largest positions.
Yep. You know, and Dan Ives, I think, is exactly right. I was listening to Steve. I actually have some agreement with Steve on some of the negativity as well, though, Scott, because at some point when you look at the growth that they had, especially throughout the last couple of years through the pandemic and everything else, can they keep that pace? Is there some sort of a normalized level that they might go to? And FX being obviously an issue as well, because we're talking about a company that's 50% here in the U.S. and 50% international. So they do have major exposure, right? And I think that combination of that and the fact that maybe there is a little bit of a slowing. I'm not saying they're slowing down too much. I'm not saying you got to hit the brakes. These guys are in trouble. I'm just saying, does it normalize back? Just look back 5 years ago to see where they were from a growth perspective and where they were in the last couple of quarters. It's very significant. And do we get back to some sort of a normalized growth? And we might. And if that's the case, then it's not as cheap, and it's one of the reasons why I'm not diving in there today. I didn't dive in when it was down a little bit more than it is right now, and I'm still just kind of looking at it and trying to figure out, do they have the possibility of being able to grow at anything close to the pace that they have over the last few quarters?
Yeah. Dollar's going to hurt a bunch of people, so you do have to wonder maybe who's next, and we'll get to that in a minute. But, Shannon, I'll give you a crack at this, too, because you own it. I think it's one of your larger positions as well. Are you worried by this or not?
No, I mean, I would say, you know, software companies in, you know, here in the U.S., they generate at least a third of their revenue outside of the U.S. And so I think we should expect, to Steve's point, that there will be other companies. I'm a little bit less concerned, perhaps, than Steve and is around. You know, we look at growth from a constant currency basis. We think that there's going to continue to be growth for Microsoft. I view this as just a well-timed adjustment. If you think about what we're seeing, continued pressure in the market, there's a bit of skittishness. It's a great time for Microsoft to come out. I certainly would rather they go ahead and guide on this now than in 3 months, where we might be getting some good momentum for these big cap tech names. So I'm happy they came out and said it. I think there will be other companies. It's certainly not changing our expectations for Microsoft, Salesforce, or some of the other larger software companies that we own.
That's why I wanted to go to Josh.